Hello and welcome back to NEO Source. In this video, analyst ratings on NEO. When I do read comments among forums or on social media, I often see people doubting analyst price targets for stocks. There are comments such as analysts adopt price targets to the stock price, analysts are uncertain because their price targets are too variable, or analyst price targets don't match the stock price. This is because a lot of people don't really know how these analysts come to their price target conclusion. So what is it that analysts actually do? Analysts often hired by banks or investment banks have the goal to break down a company to pure numbers and then go on with them to build a fundamental structure that then is used to give a firm's stock price a fair value. The tools analysts are using are the company's data of the past, like sale numbers, revenue, and free cash flow. There is not only data coming from past use to build that fundamental analysis, but also data to project the future of the company. For EV companies, these can be future EV market share modelings, or a future sales or revenue forecast. In the last video, we took a look at such data like deliveries, revenue, and revenue growth, which make up a small but important part in the fundamental analysis. Other than the technical analysis, the fundamental analysis is more of a scientific approach. To answer the statements found online, there are simple explanations to all of them. Analysts adopt price targets to the stock price. As it may sometimes seem like it, it is not the truth behind the actions taken by analysts. When a stock price is rising or falling, it is most likely to be related to some good or bad news that affect the fundamentals of that company. As said, the change of fundamentals may also affect the analyst's price targets. Therefore, when there is a change in analyst ratings or price targets, they will publish a paper or report with the according reasons why they took action. NEO stock, for example, has fallen a lot since February 2021, but if you look at the average price target of analysts, they stayed at around $60 since. The most recent price target's average is even higher. So we clearly have an example that the statement above is not true. Analysts are uncertain because their price targets are too variable. Like I mentioned, the fundamental analysis depends on the future outlook as well. Some analysts are more bullish than others, or the other way around. So the difference between their future outlooks may change and do have an effect on the price targets, but they cannot deny the numbers of the past. Some analysts see a big future for a certain company, others think it will be done in a few years. After all, you have to consider that they don't take these forecasts out of thin air, but that they have their arguments that can be as well found in their analyst reports. The most important factor is the date of the rating. There are ratings that are older than others and may not be as up to date than the newest ones. If you only have a look at the ratings of recent months, then the price targets should be closer to each other. But as there are sometimes a lot of price targets, it is always good to take the average of them to consider both the bullish and the bearish sides. Analyst price targets don't match the stock price. First of all, price targets don't chase the stock prices, as already explained earlier, but the stock prices more often tend to move closer to the price targets. Since the price targets are the given fair value to a firm's stock, you can see that in the past the majority of stocks tend to move to their fair value. The price targets can be adjusted, but the stock is a volatile product, that the one day can be near the price target, the other day it's not even close. So just if the stock price isn't matching the price target doesn't mean that it won't in the future, because price targets usually look into the next 12 months or further. So the next time you are questioning a price target, maybe go ahead and read the analyst report. Even though the fully report isn't available for free, there often are smaller statements available to public. You have to consider that analysts are putting a lot of work into these reports, and that they have high financial education. Therefore, a lot of big investment firms are buying their reports frequently, or even have their own analysts working for them. Now for NEO stock, the latest price targets I found for NEO were the 14 following. They all have a buy rating on NEO, rather it is outperform or market perform. Their average price target is around $63. If we now only take a look at the most recent price targets: Mizuho Securities $65, Bank of America $65, Morgan Stanley $66, Deutsche Bank $70, JP Morgan $70, Credit Suisse $83, and Citigroup $87. The average price target of those is now higher at around $72, which is an upside of about 146%. There has been the newest price target been initiated by Macquarie, with a price target of $37.70. It's their first price target given to NEO stock. So more and more new analysts are joining the list by time. I'll now give you an example of an analyst paper by the latest price target of $83 of Credit Suisse. Take a few seconds and read through it as it is very interesting, especially the interview at the end. Here we are at the end of today's video. I hope I could give you a small insight into the world of analysts, and that you might have learned something new, or at least be more cautious about misjudging analysts' decisions. If you like to add something, please let me know in the comments. As always, I wish you guys a nice day.